Hey, good morning and welcome to Trading Options Network. I'm excited to be back. I've been out for a little while doing a lot of back end stuff, but I am so excited to be back and bringing live trainings to you every single day in the morning and afternoon. That being said, before we get into anything, let's go ahead and go over our disclaimer. Obviously, everything we discuss is solely for educational purposes only. Do with the information what you will, but take responsibility for your actions. That being said, also be sure to like, follow, or subscribe on your favorite social media platform so you can stay up to date with everything. That being said, let's go ahead and get into it. Today, what are we looking at? We have kind of our bigger sectors are red. Most of the other sectors are, for the most part, green. Okay, what is going on? Well, let's go ahead and first and foremost take a look at the chart. Obviously, we have seen a massive bull move to the upside. We're literally looking from the lows of last October, around 410, all the way up to 560. That is a massive move in the last, 9 months or so. Mainly driven by technology, by the way, the technology sector, and then communication services as well. So those two sectors, if we were to go ahead and pull up those two sectors, you will see, let's go ahead and close that. Let's just go open up a new tab here. Excuse me, but pardon me. If we go ahead and look at those two sectors, you're going to see that they have had massive bull moves as well. So first and foremost, technology. If we go ahead and look at this past year, there we go. All the way from about 160 up to almost 240. So we're talking about a 33% move when it's at its highs. Now, obviously, it has had a little bit of a pullback recently, which I'm not surprised. But then let's go ahead and take a look at communication services as well. Communication services has also been on a pretty nice bull move, and it's continuing to move up. It really hasn't slowed down. Yes, it has had that little bit of a pullback that technology has had, but not nearly as drastic. And these two sectors have, for the most part, pulled the entire market with it. If we look at a lot of the other sectors, let's go ahead and just look at the charts here. We can kind of get an idea. Here's the S&P. Basic materials, it did have a little bit of a move, but for the last 6 months, it's been neutral. Again, communication services. Energy, since April, has been actually more of a bear, honestly. Financial services has been neutral for a long time, recently starting to break out again. The industrial sector has been neutral for a while. Again, that's technology. Consumer staples, I will actually say consumer staples is another one that has really been taken off. It did go neutral for a little bit, for a few months, but then lately has really been moving up higher. Real estate, kind of the same thing, was actually more of a bear up until recently. Utilities was actually not participating early on in the bull run, and then kind of started, and then it was falling back, but it's starting to go back up again. But again, just to reiterate, technology and communication services has really moved this market higher for the last 8 months. So what should we expect moving forward? Well, first and foremost, let's go ahead and go back at the S&P 500 chart. Again, we have a lot of these smaller companies looking green while all the bigger sectors are mainly red. Typically what this means is people are starting to profit take, and I think personally a lot of profit taking has been going on for a while. Again, if we take a look at the technology and the communication services charts, they haven't really gone anywhere. Technology had this pretty, drastic dip there. A lot of people were taking money out of technology and putting them into other sectors such as consumer staples, the industrials, utilities, things like that. That's why they're all moving higher, even healthcare here. But in the end, I think we're still in this transition period. Does this mean we're going to enter into a bear market? No, not necessarily. Basically, what this means is we're just going to have new leaders. Technology is a massive sector in the S&P, and communication services in its own right is pretty large as well. Not nearly as big as technology, but it is a big one. So now that we're having all these other sectors starting to go green, we're going to be playing a little bit of a tug of war between technology and communication services and the rest of the market. So I'm not surprised that we're seeing a little bit of a stall. I mean, we're hitting recent highs, or very, very close to recent highs, or all-time highs, really. And it's having a little bit of a hard time breaking through. I'm not surprised. We're at these all-time highs, and now everyone is repositioning their portfolio, rebalancing their portfolio, taking their profits from one sector and moving it into a sector that has not been performing. But again, that does not mean we're at the end of a bull market by any means. Now, it could start turning downwards. I mean, heck, maybe this was just a first pivot. We bounced, aggressively because we were in such a strong bull market, but perhaps we roll over and we continue going down. That could happen. On the flip side, we can just stay here and consolidate for a while, and then ultimately we go higher. And that could happen as well. And truth be told, I'm actually leaning more towards that simply due to the fact that we're in an election year. Also, if we kind of look at some of these technicals here, the 20 did dip below the 50 here momentarily because we had this massive pullback. But it looks like it wants to actually go over the 50, back over the 50. The CCI, we just barely broke that 100, which usually means we can go for another ride, and we broke it right back here, right after that gap up. And, we kind of just you can argue they inched higher, but you haven't done much. But nonetheless, we are still going slightly higher. I mean, we were at, what was that? We closed there at 554. We're at 559. So, I mean, we're literally up 1%. Okay. So it hasn't done much. MACD, on the other hand, it almost looks like it's ready to slow down. If this were to go higher without the MACD going any higher, like if we were to break all-time highs here and this fails to go higher, same with the CCI, if it fails to go higher than over here, then technically what we have is bearish divergence, meaning the technical, the subchart is making it look like we should be reversing while the main chart is still looking like it's going higher. It's setting new highs. Anytime that happens, that's called bearish divergence. On the flip side would be bullish divergence if we were under negative 100. But that being said, if we were to set an all-time high here, but the CCI does not, go higher than what we were here, which looks like to be around, it was over 200. That's insane. I mean, that's extremely, extremely high. That would be bearish divergence. So we'll see what happens. Again, I would not be surprised if we did move higher here, at least for the next month or two going into the election, and then possibly just have a big drop regardless of who is elected and what the outcome is. But people are still wanting to trade, and people are still aggressively buying a lot of stocks. So we can't ignore that. We cannot ignore that. We're out of earnings season for the most part. I mean, some smaller companies are going to continue to post their earnings and things, but it's not going to have any movement on the market. We will see some financial reports that are released this week. Just give you an idea of what we should be seeing. We will have, the GDP on Thursday and the core PCE on Friday, but not a ton otherwise. I'm actually looking at it on my phone right now, so we shouldn't expect to see a ton of financial reports or movement from any fundamental analysis this week. So all we got to do is just play the charts. Right now, the S&P just kind of wants to move sideways for the most part. But again, if we're looking at those other sectors, there's definitely a lot of trades in here. I mean, materials, looks like it's having a little bit of a pullback today after it did go up. But nonetheless, this looks like a great potential for a bearish trade, honestly, or a potential neutral trade, maybe a butterfly or something. Because we've been in this, if I were to go ahead and draw a box on here, boom, right here, we've been in this channel. There we go. Come on. There we go. All right, so we've been in this channel right here. So the question is, are we going to break out? It looks like it wants to be rejected here, or are we going to move back down towards this middle? That's a great opportunity for a neutral trade or a bearish trade. I mean, obviously, we're going to want to wait to see what happens after this candle. This is a telltale doji, okay? If it were to finish like this. So tomorrow, we would get more of an idea of, hey, did we break higher and break out of this channel, or do we go back, towards the lows of this channel and then potentially make a trade there? If we go ahead and look at energy, energy's kind of been in this flag pattern. I almost don't want to call it a bull flag because it's been so long. But again, excuse me, like this rotated rectangle. Oop. All right. So we've been in this flag pattern. And again, are we going to just continue to bounce off of this high right here and move down again? Or do we break out? Time will tell. Either way, once that happens, we could potentially open up a trade there. A few like the financial sector, for example, this is the exact same thing that we were just looking at with the industrials. Although I will say this one has broken out. If we just go ahead and draw a line right here, we clearly broke out there. I mean, it's plain as day. If we draw another line here, let me go ahead and just... There we go. Make it a little bit more accurate. You can almost argue that it was in a ascending triangle pattern. But then again, I can also bring this down here, move this up there, and we could say, hey, we haven't broken out of anything yet. So it all really just kind of depends on how you want to look at it. Personally, I kind of like the idea of actually looking at it both ways, as we broke out of this specific resistance line, but now we're hitting more resistance, and potentially we can come down and hit what was previously resistance, which is now support, and then continue making a kind of a sideways to up pattern from here. I think that's a totally feasible thing that can happen in the financial sector here. I mean, industrials looks like it wants to break out. Very, very similar. Almost the exact same chart as the financials. I'm not going to draw on it, but you can see almost the exact same chart. Technology, we just talked about. Consumer staples. This is one that really wants to break out, and it is not slowing down at all. Again, if we go ahead and draw a box here, been in this channel. It's clearly broken out of this channel and has continued to move higher. Now, personally, am I going to go chasing right now? No, absolutely not. I'm going to let this come back down here to the 20-day moving average and see if we can get a bounce and then possibly move up higher. But again, that's a potential for a trade right there. Real estate. Real estate's another one where a lot of money's been going into because it's been completely ignored pretty much the entire bull run. And now that we're having this little bit of a pullback that we've had from technology and consumer staples, real estate has been taking off. This is actually quite a big move for real estate. Real estate does not see a lot of those moves. Consumer discretionary, kind of the same thing, only in this one is a little bit weaker than real estate. It has not participated at all. It's just been sideways the entire time. Okay, with a small breakout here, but it came right back down into it. It pierced it here when it gapped down, but went straight back up. And now we're kind of in this area. It's like, are we breaking out, or are we just creating a larger channel where we have to kind of, move the box, I guess you could say. There's so many different things. That's why technical analysis is never going to be perfect, because anything can happen. Utilities has been breaking out like crazy lately. This is one that, and it's not really breaking out, by the way. If we look at the this from beginning of July up until now, it is the exact same why can't I think of the word? It's the exact same slope as the 20. So as long as the 20 keeps moving up, should we expect the utility sector to keep moving up with it? I mean, you can argue that. I will say when the market had this big pullback right here at the very beginning of August, yes, this one pulled back a little bit. It had a nice red day, but that was it. It just kept moving on after that. So utilities is a great sector to be bull in right now. Obviously, there's not a lot of sectors to really be a bear in unless you are playing it in one of those neutral channels and you're expecting it to bounce off of the top of that channel and move down. But again, overall, that's still a neutral stock or a neutral sector. Healthcare has recently broke out. Again, this is another one that hasn't really participated too much in the bull market recently. I mean, yeah, earlier in the year it did, but then it just completely stopped and was moving sideways for a while, and now has recently broke out. So overall, again, what should we expect? It's a flip of a coin. If I were to be a betting man, I would expect us to break new all-time highs and continue to move higher, like maybe for the next month and a half going into the election. But again, that being said, September is also one of the slowest months of the year. Not one of, it's the slowest month of the year when it comes to trading. So, like I said, it's a flip of a coin. We just have to play the technical analysis. We'll see what happens with the financial reports that come out at the end of this week. And maybe they have a little bit of, some say in what the market decides to do. Recently, the market has been completely ignoring bad news and celebrating good news. And if we continue that trend, then there's no reason we don't just push higher. I mean, we had every reason to break down. Oh, and by the way, I forgot to mention this. We haven't even really tested that 200-day moving average. That's the reason why I had it up here. We haven't tested this 200-day moving average the entire bull run. That's how strong of a bull run it has been. But again, as a betting man, it's a flip of a coin. It could very easily just roll over and finally test this 200. This big drop, I thought for sure we were going to test the 200. We never even got there. I mean, the 200 at this point was at, we'll call it 500, and the lowest we got there was 510. I mean, then we closed at 517. So that was still quite a ways away. More than 3%. The close was more than 3% over the 200-day moving average. So we haven't tested it yet. We should be testing it soon. Maybe it does happen in the next month or so, or maybe we go higher. Again, we just kind of have to wait and see what happens. I will be doing a trade. I'm not a trade of the day, a stock of the day, as well as a tip of the day. So as I look through, and this will probably be starting today or maybe tomorrow. So as I'm screening through the market and looking at different stocks and ETFs, I am going to post a stock of the day as well as a tip of the day. Okay. And that stock of the day is basically something that I'm seeing in that stock or ETF that could potentially cause me to open up a trade in the near future. Okay, I'm not going to be saying I will be opening up a trade, but it'll be one that I'm definitely putting on a watch list. So that being said, hope you enjoyed this training, and I will see you in a few hours for this afternoon's training. Have a great rest of your morning.